recording now. We are recording our meeting. So hopefully today when we finish, because I have electricity, we'll be able to make it available online. Okay. I am going to share Okay, I think I've managed to share our question where we were. So what we had covered was that we were dealing with our conveyancing matter, how to record our conveyancing matter. And also what we did was that we looked at the initial trust transactions that are given. So I've illustrated to you how to record the opening balance, which was, we've got an opening balance of 208,000, which I'm highlighting on that Word document. And then we are told it is in our trust account. So we had to record it in our trust account. So we captured our debt and then our opening balance. And then in our trust account, there's no need for us to split, to show the split of our trust creditors. What we do is that we take the full figure, and then the split of the trust creditors, we do it as part of our recording of our trust ledgers. So in this case, we had to record under our trust ledgers, which was, we had Mr. Jaden who had 100,000, which we recorded here. And also we had Miss Magda with 108,000, which we've recorded here. So that recording will complete our double entry system. And then also we had other given transactions, 3 given transactions, which we then recorded through our ledgers and as well as our trust cash book. So I will just briefly take you through so that we can just do a rehash. So we were told that we attended to the file of Mr. Jaden and we raised an invoice on 15 June of 25,000. So when we raise an invoice, then we raise an invoice in our business transactions. So which means that we go to our business ledgers. And when we are raising an invoice, it affects, I've done an illustration. It affects our data, which is the client. It affects our fee account, and also it affects our VAT account. With the fee account, because this amount that we are given, it's inclusive of VAT. So for us to calculate our fee, we have to take out the VAT. So to take out the VAT, we calculate the amount at 100 divided by 115. And then the VAT is at 15 divided by 115, such that if you add them up, they give you the full amount of 25,000. So if you are to move to our ledger accounts, so for Mr. Jaden, we debit him with the full 25,000 because he's going to pay for the fees and the VAT at the same time. We do not separate the two accounts. But what we do in our ledgers, we then separate to show in our fee account as well as the VAT account. So our fee account will show what belongs to the firm, which is 21,739 according to that calculation that we had. And then our VAT account is a creditor, it's a liability, which shows that Mr. Jayden is paying us so that we can pay over to SARS. So we show it as a liability. Okay, and then the next transaction was we briefed Advocate Magiba on the matter of Miss Magda, and he rendered a bill for 7,500, which was paid on 24 June. So this is our trust account. So we are given an invoice from the advocate. So our client has got money in the trust account. So we go back to our trust cash book. Our client has got money in the trust account. So there's no need for the business to pay this invoice using the practice money. So then in such a case, the transaction is recorded in the trust cash book, where we show that we are paying Advocate Magiba on behalf of Miss Magda, 7,500. And then we go to our ledgers to reduce the balance of Miss Magda to show that we have paid the advocate. So this is the debit entry, which is there to reduce our creditor. And this is the credit entry, which is there to reduce our cash, trust cash balances, because we've paid out the money. And then we are given part C, the bank charges were 98 and the interest 405. And we then record that. So when it comes to interest, it's money being paid into the trust account, interest is being earned. So we record it as a receipt. It's money being receipted. And then the bank charges, it's a payment out of the trust account. We record it as a payment. And then for the double entry, we create a ledger. This is the ledger for the LPFF, because to the fund, this is the fund, the Fidelity Fund, we pay the net effect of the interest. So if interest is higher, we take our interest, we less our bank charges, then that's what we pay. So in this case, when our analysis of this ledger, then it would mean we are owing the fund the net. It's our creditor. The credit side is bigger, the debit side is smaller. So at the end of the day, we'll have to pay the difference on 1 July, where it says on 1 July. So because we are not capturing July transactions, I have not processed that payment 1 July, but yes, we can capture it and show that we are supposed to pay the net effects. Okay, and then from there, the business account, we've skipped it so that we can concentrate more on the critical topics. If you have any questions, please feel free to ask. Feel free to let me know so that I can then answer. If you do not understand anything, let me know so that I can answer. You find when I'm sharing the screens, it's difficult for me to check if you are chatting. I won't be able to see your chats. Okay, so for our conveyancing transaction, I think we had covered most of it, but I'm just also going to touch on it. So the firm is instructed to transfer a property from Mr. Jayden to Mrs. Vilakazi. And on 6 June 2022, the firm received 850,000 from Mrs. Vilakazi for the purchase of a property. Mrs. Vilakazi instructs the firm to invest the money in a Section 864 account. We immediately open a Section 84 account, which is the firm immediately opens the Section 84 account at the bank and transfer the money therein on 8 June. So this is 6 June, this is 8 June, the money is transferred. So the first transaction would be the receipt of the 850,000, which is received in the trust account. This is the trust transaction on behalf of a client. So it cannot be a business transactions. It comes to our trust account. So this is the transaction that we recorded, which is the purchase price that we are recording. So this is the purchase price of 850. And on the 8th of June, we invest. So we go, this is where we invested the money. We have received and then we invested. And then to complete the double entry, we go to our trust ledger. So we created a ledger for our client, which is Vilakazi and Jayden conveyancing matter. So the moment we receive money, our clients are our trust creditors. So this is the credit side. This is the credit side. This is the debit side of the transactions. So
sorry, ma'am.
yes.
Can I interject there just before you go on?
Yes.
Remember, we invested the money into 86.4, and now the
Can
property.
we what?
The money was invested in 86.4, isn't it?
Yes.
And then now you are saying that the property is now registered.
Yes.
So since the property is registered, it means the money goes to Mr. Jayden because he's the seller and Mrs. Vilakazi is the purchaser. So how do we then
Yes.
do we recall on date of purchase to the trust? I see you are moving fast. I'm taking.
Okay. Oh,
yeah.
all right. Sorry for that. So I've started with the where we received instructions. So initially we received instructions to transfer a property, ne?
Yes.
So after receiving the instruction, then we are paid the purchase price.
Okay.
So when we are paid the purchase price, transfer is not started. We have not drafted documents for us to start with the transfer. So when we receive this money, it will come into the trust account. So we've got security to say if we can start with the transfer documents, then we know that the purchaser has paid and the property through documents can now move from the seller to the purchaser because we are there to guarantee. So we are there as a guarantor to say, Mr. Seller, you get your money. So we first of all start by receiving money. The deposit, the guarantees, if ever there's a bond registration which is being done, we receive the guarantees from the bank. So in that process, whilst we are receiving the money, you'd find we can be instructed by the client to say, oh, okay, I've given you my money. I know the transfer process will take a bit of some time. Can you invest my money? So we are on the initial stages.
Okay.
Yes.
All right. We can proceed now.
Okay, thank you. So our first transaction is we are receiving the 850, which is more of like the purchase price. So when we receive the money, like what I was explaining, we receive it in trust, awaiting the transfer. The moment the property is transferred, that's when we pay the seller, where we are sure that the property has moved from the seller to the purchaser. Because we are sitting in as guarantors, we are sitting with the money and then we pass it over to the seller. So in this case, so we received the 850, which we are receiving here. And we invested it in a Section 86. So these are what is happening at our bank. Money received in trust, money paid out of trust. And then when it comes to our ledgers, we also go and do the double entry. We receive on behalf of the client and we pay it out to an investment account. Just like what I explained before, like now, because of reporting purposes, they now want to see investments. They want to see creditors which are sitting under Section 86.4. So we are forced to open a ledger for Section 86.4. So if you look at this transaction, I'll highlight it in orange. You find now we move it to a Section 86 ledger for Mrs. Vilakazi, so that we show that the money is not in trust. We are taking money out of trust. So the effect is that we have taken money out of trust and we have put it in an investment. And also when we do our cash books, when we move this money out of trust, we are paying out of trust, we then are receiving, it's being received in an investment account, So there is a bank account that is specifically opened, and that bank account should be recorded. Every transaction that go through that bank account should be recorded. So you are forced to when you pay out of trust, you are forced to then come and open an investment account, more of like a cash book or a ledger. Then you open it up and then you record the money that has been received. Okay, and then on 9 June, Mrs. Vilakazi deposited 23,000 for the transfer costs, transfer duty 7,500, transfer costs 15,500, including VAT. So this one, I just say to you, let's ignore the rates. I know if we look at rates right now, for a property less than 1,000, less than 1 million, we are not supposed to pay any transfer duty. So we are just going to ignore that, and then we consider we're just doing it for the concept.
Okay, ma'am, before you proceed, the 23,000, the first deposit was the 7.3 and the latest of 15,000, which comes to that amount.
Yeah, so it's just a split. We are told she deposited 23,000. So when we go to our ledger, you see our cash book, when we go to our cash book here, we are more of like told she deposited 23,000, but
Yes.
the split we are being told so that we'll be able to account further. You understand, ne? Hello?
Yes, I do.
Yes, so in our cash book, whatever that gets into our account, we record it in full. So we received 23,000, and then we record it also in our client's ledger, this is their conveyancing ledger. We have received 23,000. You see, and then we are told that the split of the 23,000 is 7,500 is for transfer duty. The 15,500 is our transfer cost, which is like fees, inclusive of what? VAT. Okay, and then on 10 June, Mr. Jaden deposited 7,500 for the rates and taxes.
You may proceed, ma'am.
Yes. Mr. Jaden deposited 7,500 for the rates and taxes. So we go again to our cash book. We have money deposited, which is 7,500. So we record it, we receive it in our cash book, which is here. And then on 17 June, we are told we paid the municipality an amount of 7,500 for the rates and taxes. And then we come, here we are, we record it, we are paying the municipality 7,500. And also on 17 June, we paid SARS an amount of 7,500 and obtained a transfer duty. So here we are, we record it in our cash book. So whatever that we are recording in our cash book, we also remember to come to our ledger and also record it. Okay. And 24 June 2022, we lodged the documents and the property was registered on 27 June 2022. So now we are talking registration. Documents are lodged, and then registration, it means the property was successfully transferred from the seller to the purchaser or to the buyer. So at the deeds office, we look at the process is complete. And then on 29 June, we withdraw the money from the investment account. And we are told that the same money had earned interest of 3,300. Okay, so this is our investment account. So initially we received 850,000. And the moment we tell the bank that we want to withdraw the funds, what the bank does is that then it then calculates, they would calculate the interest, and automatically on the bank, they would credit the account with the amount of the interest that was earned over the period that we have invested. So in this case, it's 3,300. So when you look at this interest, remember, we are told, so this is the interest, 29 June 2022. So we've got interest and it was deposited in the investment account. So investment, we are going to debit our investment account, which is the section 86 for account. So it's a debit because the account is receiving the money. You see, the account has received the money. And if we can go back to our cash books, this is a debit. It's a receipt. It's a receipt of the money. So, and then we want to show, remember, we are told that 5% goes to 5% of the money is supposed to go to the fund. So the credit side, then it means we're going to credit the legal practice fidelity fund with the 5%. So we open a new ledger account for this particular transaction. We'll open a new ledger account where we account particularly for this transaction, because the fund wants us to account for each and every transaction separately. That's why they say you open particularly for each client. You do not open a lump sum account where you put for various clients. And then the difference of the interest then goes to the client. So in this case, it's going to go to our Jayden Vilakazi, though it's money for Mrs. Vilakazi. Investment ledger. So this is the 95%, which is going to the investment ledger. So if we can come back, we need to then account for this one in a T account. When I show your journal entries, I'm just showing you so that you can have an understanding of how to post these transactions. But we then transfer them from the journal entries into our T accounts. So when we come back to our cash books, so you can see we've got the 3,300, and then this 3,300, how we record it, we go back to our ledgers, to our ledgers. So we have a section 86 ledger, which is for Mrs. Vilakazi, and then we show the interest component, which is coming to her, which is 3,135. And then also we have to open an investment account, sorry, an account for the Fidelity Fund, where we show that they are also receiving 5% of the money. Okay, so the interest component, that is how it is treated, received in the ledger account and then split 5% to the LPFF, 95% to the client. Okay, and then we paid Mr. Okay, and then we withdrew the money from the investment account. Ne? So now we are withdrawing the money from the investment account. This is our investment account. So automatically what happens is that the moment the bank deposits 3.3, they will automatically also pay the 5% to the fund. They'll automatically pay. So this one, you will find it on your bank statement, unless if your account is not on a sweeping system or automatic system, or not properly opened up. But if it's properly structured and opened up, then you would find the bank will automatically pay the Fidelity Fund. So these transactions, you find them there. So we then just record it in our T account because it's already there. And then the difference is what we transfer to our trust account. We're now transferring, we are closing our account. We transfer to our trust account, and then we are closing the investment ledger. So we come to our trust account. There we are. This is the amount that we've transferred from the investment ledger into the trust account. So now we are receiving the money back. So whatever that we are doing to the trust account will also go back to our ledger accounts. So in this case, this is where we left off. Yes, this is where we left off. So on 29 June 2022, we are closing off investment close. We close off. So we are transferring to our trust ledger for Mr. Jaden and Miss Vilakazi, and we are closing off, and we transfer the full 853,135,000, and then our account balances, there's nothing left. So when we also go to our client's ledger, this transaction, we also move it. Now it's back into trust. We are coming back to our trust account. So section 86.4 investment. So we are closing it off. We are transferring back into the trust account so that it becomes a trust creditor, just like that. So our matter is what kind of like the money we've closed off here, and on our Fidelity Fund ledger, we have recorded the interest, and then the bank is automatically paid the 165. So as you can have a look, this account is also closed off because we have received and paid. Okay, and then we are told that we paid Mr. Jaden and Mrs. Vilakazi the money due to them. So we need to establish what is due to them, what is due to Mr. Jaden, what is due to Mrs. Vilakazi. So in our case, because we were told that the property was being sold for 850,000, we are not told anything to do with any estate agents. So it means that we now have to pay Mr. Jaden his full 850,000 because there is no other thing that we have to withhold from the money. So on 29 June 2022, now we are paying off to Mr. Jaden. So it's the settlement. Settlement. So we can still just show that our file is Jaden stroke Vilakazi, so that we can trace it. And then we are paying the settlement, which is 850,000. We are clearing his account. Okay, and then we go to our trust ledger as well. We have paid 850, so we are also reducing the trust balance. So this is coming from the trust account, and this is to Mr. Jaden. And how much? It's 850,000. And also we are told that we have to pay Mrs. Vilakazi. So what we are supposed to pay to Mrs. Vilakazi is her interest component, that came from the investment account. That is all that we owe her. So on 29 June 2022, the same matter, and then we are paying interest to Mrs. Vilakazi, and it's 3135, like that. So that is the interest that we are paying over to her. When we go to our trust ledger, we also come and record that we are paying her from our trust account. So it's Mrs. Vilakazi. So it's interest that we are paying, 3135. Okay. So at the end of the day, let's see, our trust account is supposed to balance off, of which is not yet balancing. Why? because we are told that we also transferred our fees to the business account. Yeah, we also transferred our fees to the business account. So that split that we had there, we are told that our fees, transfer costs, they are amounting to 15,500 inclusive of VAT. So now we have to transfer our fees for this matter. So we are paying out of the trust account. So it's 15,500. So we'll take it in full like that. And on our trust ledger, we also come same date. Okay, so if you can have a look at our ledger, these two amounts are now balancing. So it means we've accounted for everything. The account is now balancing, everything has been paid out. And then we need to then, since we are transferring money to the business account, then it means we also need to record these transactions to the business side. So in this case, we'll start with with recording our fees. So it's the same concept with this one of the fee. It is the same concept. So for us to determine our fee, we have to come and calculate. So these are our calculations. And then our data is Mr. Jayden stroke Mrs. Vilakazi. See? And then the total amount, 15,500. And then now we have to calculate our fee component out of that because it's inclusive of VAT. So it's the same concept. It's the same concept of dividing by 100 and dividing by 15. So if we can add up this, it comes to 15,500 like that. So we then need to record this in our books. Hopefully I'm not too fast for you. If I'm too fast, then you need to stop me and ask questions. So we go to our business ledgers. So this is our ledger, the conveyancing ledger, Vilakazi's conveyancing. We come, they are our debtors on 29 June. So we are raising fees plus VAT, 15,500 like that. And then we go to our fee account. This is our fee account, 29 June 2022. It's Mr. Jayden stroke Vilakazi Meta. And how much is our fee? It's 15,000 multiplied by 100 divided by 115. That's our fee. And when we are done with our fee, we record the VAT so that we can balance. Which is 15,500 multiplied by 15 divided by 115. Okay, so we have recorded this part of the transaction. And then we are told that this money, it's being transferred from the business account to the trust account. So we are doing a trust transfer. We are doing a trust transfer, which is more of like this transaction here on top. So already we've recorded this part on the trust side. And then on the business side, we now have to record the second leg. So which means that we are receiving in our business ledger, 29 June, 29 June 2022. We are now receiving from our data, which is Mr. Jaden Vilakazi, and it's a trust transfer, just like that. And how much are we receiving? 15,500. So when we are receiving, we receive the full amount, because there's no need for us to split to show the VAT and to show, because in our bank account, when we transfer, we just transfer the full 15,500 and it comes into our bank account and we receive it. So our ledgers are the ones that then help us to show the split. Okay, so we've recorded it, and then it means then we go to our debtors and also we record the double entry here. This is our ledger. So we are reducing, now we are reducing what our data is owing the firm. See, because the fee was received through a trust transfer. So in the client's ledger, like that, there's no need to split. If you split, yes, I would mark it, but you are giving yourself too much work. So we just show what we have received. The other ledgers are the ones that help us with the split. It shows where the money is going. So what guides us is to say if the fee is including VAT, we know that we are going to post into our fee account and we are going to post in our VAT account. We are going to post in our fee account and then in our VAT account. It means we have to split. But if we are told that the firm is not VAT registered, and then we are told that these are just fees, then we just post into our fee account. There's no need of opening a VAT account because the firm or the practice is not registered for VAT. Okay, so this is how we then record our transaction. So as it is, we are done with this conveyancing transaction. We are done with this conveyancing matter. We've recorded both in the trust side and we've also recorded in the business side. So I don't know if you've got any questions before I can proceed to the next one. Okay, if no questions, then I'll proceed to our next matter, which we are told that it's a collection matter. We have a collection matter. So we were instructed by Met attorneys to collect. Let me try to enlarge it a bit and we read it and then we answer the question. Okay, we were instructed by Met Attorneys Inc. to collect an amount of 25,000 on behalf of their client Blaze CC from a debtor, Supreme Services. So our correspondent partner is Met Attorneys. So our client is Met Attorneys. We are collecting on behalf of our client, which is Met Attorneys Inc. And they tell us where to collect because they are also instructed by their client, which is Supreme Services. Their client is Blaze CC, and Blaze CC is saying to them, can you collect for us from our data, Supreme Services? So you'd find it would mean like Met Attorneys is not in the same jurisdiction with Supreme Services. So they've decided to give us the matter. We handle the matter on their behalf and we agree on a 1/3 fee sharing rule and collection commission of 10%. So we are given the matters, we are just going to take them as they are. I know there are limits in terms of collection commission, which is like 1,000 rands per each amount that you collect. But in this case, let's just use this example so that we can illustrate. Okay, so we are told on 2 June 2022, our firm charges 500 rand exclusive of VAT to open the file. Okay, so this is more of like a business, it's a business transaction. We are charging our fee for opening a file, which means we go back and record in our business. We go to our business ledgers, we open a new matter, and in this case, it's a data, it's one of our datas, and it's Met Attorneys Inc. So I had just done a blank template so that we show how to record. Okay, so it's 2 June 2022. We are raising an invoice for 500 rand. So our fee plus VAT. Remember, we are registered for VAT, so we have to always have fees and VAT together charged to our data. So in this case, our fee is 500, and we are going to put VAT. We're going to put VAT. So how we put VAT, it's we say multiplied by 1.15, or it's 500 plus open bracket 15% of 500, like that. 500 plus 15%. So it's fee plus VAT, and we get 575. So this is how we calculate. And then the moment we've got fee plus VAT, it means we need to go to our fee account, we need to go to our VAT account, and we split the amount and record it there. Okay, so we go to our fee account. This is our fee account. It's on 2 June 2022. So it's Met Attorneys Inc. And this is for file opening. And then our fee, it's 500. So it's easy because this one is not inclusive of VAT. It's exclusive, so it's just 500. And then we go to the VAT account. File opening. So the VAT component is that 500, we said it's 500 multiplied by 15 divided by 100. 15% of 500, which is the 75. We have our fee plus VAT. So the VAT, it's 500 times 15%. Okay, this is how we get it. And then remember, this is a correspondence matter. And then we are told that we are going to share. We are sharing the fees. We are sharing these fees, we are sharing them. So which means if we are sharing the fees, then we need to come back to our fee, which is this one of 500, because we are not going to receive the full 500. We are going to give away, a third of that fee. So it's to Met Attorneys Inc. a third of the fee. So a third of the fee we are giving away because we're given a matter. It's not ours alone like that. We are going to give it to Met Attorneys. So this is how much we are reducing our fee with. Means we are reducing our fee with that amount. Okay, so if we are reducing our fee with that amount, it means we need to still go back to our client to complete the double entry, because we recorded that our client owes us 575. But if he's not going to pay us the full, if we are not going to receive the full 575, it means we also need to show the fee sharing and the VAT sharing. 1/3 file opening, like that. So what we can do, we can show, we can calculate the fee and the VAT separately, or we can just come and calculate everything inclusive. 575 multiplied by 1 divided by 3, or multiplied by a third, which is not, so they are not going to, we are not going to receive 575. We are not going to be less by 191.67. And also on our VAT account, when it comes to SARS, we are not going to pay SARS the full 75 cents. We are also going to take out a third, because that is going to be paid by our correspondent. So to June. So this is for the file opening. So it's 75% multiplied by 1 divided by 3, because this is going to be paid by our correspondent. So the 3 accounts are affected by the same transaction. Let me just illustrate probably file opening fees plus VAT. So initially we said we are recording our fee plus VAT. So our data in this case, it's what met attorneys. Met attorneys. And for opening the file, the fee is 500 and plus VAT, which is like that, which is 575. And the fee for opening a file is 500. And then the VAT for opening a file, it's 500 times 15%, that, which is 75. So this is our first transaction that we've recorded. But remember, we are sharing the fees. We are sharing these fees. So in us sharing, it means on our data, they are not going to owe us 575. So we are more of like reversing the initial transaction just so that we show that we are sharing. So our data, let me just copy from here like that. And then we are now doing the opposite of what we have done, because we want to reduce the 575 by a third. And we want to reduce our fee by a third. We are going to reduce the VAT by a third. So this is what we are sharing. This is the sharing of the fees. So that's how you calculate your sharing of the fees. So you first of all post this, and then after posting, then you more of like do the opposite of what, and you are more of like reversing, so that our firm will remain with 2/3. 2/3 is what it should come to our firm. A third should go together when we are paying our fee, when we are paying the final balance. So when we are paying the final balance, we will take that money and give it over to the correspondent. Okay, hopefully you understand. If I'm too fast, I can repeat. I can repeat for you. Okay, and then 2 June 2022, we paid 150 to a trusting agent. So this one we are paying. So which means, and we don't have money in trust. We haven't received anything. We are still trusting the money. We are looking for the data and we are trusting the money. We haven't received anything. So we are paying out of our funds. So which means we will come back to our business cash book. We are taking our money It's on 2 June 2022, and our matter, it's Met Attorneys, and this is what we are paying for: a trusting agent, so that we can execute the matter, which we are paying 150 rands, just like that. We are paying on behalf of our client. So we have to then balance. This is one leg of the transaction. It's a payment. And then we go to our business ledgers, to our data, which is Met Attorneys, which is this one. We paid on their behalf, which was a credit to our cash book. So now we have to debit them to show that they are owing us. So it's our business account, and this is for the trusting agent, and it's 150 rands, just like that. So it's a payment that we've made on behalf. So with this one, we are not sharing with them, we are not doing anything. It's a disbursement. We will need to recover the disbursement as it is in full, because we are rendering a service to the client. We shouldn't suffer in paying for them, so we'll recover it when money comes. And then 28 June 2022, we are told Supreme Services, which is the data, paid 15,000 into our trust banking account. 15,000 into our trust banking account. We are just receiving money. It's money received. So if we are receiving money in our trust account, we come to our trust account, we receive it. So our client, remember, it's Met Attorneys. And then it's money coming from Supreme Services. So it's a deposit, 15,000. So after we've received the money, then we are told, oh, okay, I've done one leg of the transaction. We need to also go to our trust ledgers. You see, now in our trust account, something is happening. Something is now happening for this matter. We are receiving trust account, it's Supreme Services, how much? 15,000. So we've completed our double entry. Always remember to complete the double entry. You can see me, I'm also kind of like forgetting. And then 29 June, we raised our invoice and collected the fee for opening the file, the trusting agent's fee, and the collection commission. Okay. So I think I've raised our invoices a bit early, but this is what we are told. 29 June, we raised. So we've recorded the one for opening a file. We've recorded the one for trusting an agent, and sorry, for the trusting agent's fees, and now the collection commission. So the collection commission, we collected 15,000. So we go back, it's going to be more of like a transaction like this as well. It's going to be similar. So this is now collection commission. So our collection commission, how much is it? We collected 15,000. And then we are told it's what? 10%. And then we have to also include VAT, because SARS will need their VAT money. SARS will always need their VAT money. So on the 10% of the 15,000, we have to pay SARS. So we include the VAT. This is what our data is debited with. And then the fee for the collection commission. So it is 10%, 15,000. 15,000 multiplied by 10%. So that is the fee. And then the VAT for the collection commission. The VAT is 15% of the fees, so which is equals to 15,000 multiplied by 10%. Of the fees, that's the fees multiplied by 15%, which is 15%. But yeah, then we get our VAT. So it's 15,000 multiplied by 10%. So that is the commission. Multiplied by 15%, we are adding VAT now. Then we get the VAT amount. So if you can have a look at this, these things are balancing off. They're balancing off. And here we are now sharing the fee. We're now sharing the fee. It's the collection commission that we are now sharing with our correspondent. Collection commission. I think we'll need to take a break after we finish this one, so that I can give you a break and then we kind of like come back and then push a bit. I think we'll finish early unless if you've got any questions. So to record this transaction of the collection commission, we are starting with our data, 1,000. So we go to our data on our business ledgers. This is our data. So it's on 29. So it's a matter of copying our journal entry. And it's fees plus VAT. And then in this case, it's just to remember, collection commission. And then this one was for file opening. So our fee plus VAT, we said it's 10,000 multiplied by 10%. Fee plus VAT. Multiplied by 1.15, like that. We then get our fee plus VAT. And then we do our fee sharing. 29 June 2022. And then we fee share of the collection commission, 1/3 the collection commission. So it's 1,725 divided by 3. Yes, like that. Because we are going to give them like that. So we've recorded this part, and that part. We've done the fee share, we've already shared the data part. And then let's record our fee. So we come to our fee ledger. So this is our fee account, 29 June 2022. So it's met attorneys as well, but this time it's collection commission that we are getting. And how much is our fee? 15,000 multiplied by 10%. That is the total fee. But then we have to share it. 29 June. We are now sharing it just like what we did on top. Collection commission, we are now sharing. And how much are we sharing? Our total fee divided by 3. It is 1,500 divided by 3, like that. And then also we then go, so we've done this part now, this one. Now done. And then the one that is left, it's the VAT component. So we also go to the VAT account. VAT account, which is this one, the VAT liability account. And then we record, and it's our maid attorneys is for collection commission, like that. And the full VAT, which was supposed to go to SARS, is 15,000 multiplied by 10% multiplied by 15%. That is what was supposed to go. But because we are giving a third to our attorney, they will pay over after they do their own computations. So we remain loyal to the concept. We also pay them. And then this is file opening. Okay, so how much are we going to pay over? So it's 225 divided by 3, which is a third. So we're going to pay over 75. Okay. So say we've recorded now, everything is recorded out of this leg of the transaction. Okay. And then we are told that we account to maid attorneys and pay the money due to them from the trust account. Okay, so we are supposed to pay money due to them from the trust account. So what we do is that to account, we go back to their ledger. Maid attorneys, this is the ledger. As you can see from the ledger, we are supposed to collect. This is what we are supposed to recover, but this is what should go to them. So if we can compare the two sides, you'll find we've got a difference of 1,683.33. So of this amount, we are supposed to receive it. This is what we are going to transfer to our business account. This is our trust transfer. So where you get your trust transfer, you get it from the business ledger, because that's where you determine what fees and what recoveries are supposed to come to the business account from the trust. So we are supposed to transfer. You see, this is how much we are supposed to transfer from trust to the business account. So this one, I've just shown it. I've started from here because it's easier to compute when we are coming from here. It's easier to compute. So then it means we need then to go to our trust cash book and show that maid attorneys, we are supposed to do a trust transfer. So it's oh, sorry, I'm recording on the wrong side. It's a trust transfer. So we are transferring funds from the trust account to the business account. Which is trust transfer. Which is our fees plus disbursements. So how much are we transferring? We transferred the same amount. So what is the same amount that we have established from the business? So it's this one, 1,683.33. 1,683.33. So that's what we are transferring, 1,683.33. This is what we are transferring to our business account. So if we are transferring this amount to our business account, then we also need to record it to the trust ledger of maid attorneys. You see here, we record it 29 June. We are doing a trust transfer for our fees plus disbursements. Remember, we paid disbursements. We've already paid the trusting agent. So this is what we are transferring. So if you can look at the two balances, if we are taking this to recover our cost and our fees, then it means at the end of the day, we are supposed to pay Met attorneys this amount, 13,316.67. So that is what is going to go to them for the collection that we have done. We are paying them 13,316.67 for the collection that we have done on their behalf. 29 June 2022. So from our trust account, this is the settlement that we are doing to them. How much? 13,316.67. That is the settlement. So the 15,000, we take our 1.6 and then we pay them 13,316. And the same amount, we come to our trust cash, because remember, we are paying out. We are paying it out. So Met attorneys, and then we do our settlement. So this is what is, if we can add up, it will come to 15,000. It will come to 15,000, which is this one that we collected. We collected it, we took what was due to us, and then we paid what is due to them. Okay, and to close off, so in our business account, we're going to receive this. This is what we are receiving in our business account. So we come to our business, 29 June 2022. Got our data, which is Met attorneys like that. And then how much? 1683.33. 1683.33, like that. So this is what we are collecting for our fee as well as effort. And on the business ledger, we'd already dealt with that, because the business ledger is the one that gives us the balancing figure of how much we are supposed to collect. So this is how we work out our corresponding fees. So I hope you'll be able to follow through. This is how we work it out. So I think I am done with this part. We can take a break. This is 12 past 5. 12 past 5, we can take a break and then come back, say at 20 past 5. And then if you've got any questions, or if you want me to explain further, then I can more of like explain further. And if you want more examples or something, then we do more examples and we take it from there. Okay. Or if you've got any questions, then 20 past, let's have a question session. If you want me to illustrate the business account, since we still have time, I can illustrate the business account and then we take it from there. Okay, thank you. Hello, good day. I am back. Okay, I saw a chart. Patrick said, please, if we can get the activity question as well as the recording. Yes. Definitely today you will get the recording and the activity. I'm going to post soon after we finish, then I'm going to post the activity, the question and the answer so that you get everything. Today I'll stop recording so that Grace can access it. Yeah. Okay, do you have any other questions? Any other questions? Do you want me to? Yes, Ned. Hello, hi Nelly. Hello, hi Nelly. Your hand is up. If you wanted to say something, we can't hear you. And I can't hear you. Maybe you can type in the chat so that we can see if you've got any question. Okay, so all right. So these are our illustrations. What I can do, since we have another 30 minutes to go, I can go ahead and then we tackle from the business side. I left out some transactions on the business side of things. Then we can just show each other, help each other to show how to record, just for your benefit. But if you do not have time, then I will make sure that the recording is sent to you, and as soon as we finish, I'm going to post the full answer. So I'll go back and share our screen. Okay, this is our screen. So let me extend the questions. Okay, so we've covered the trust. Okay, Nelly, you are asking for control. Okay, we have covered the trust transactions, and then now we can have a look at the business transactions since we do have time. So we are told, so now we are doing the business, we are dealing with the business. We are told that on 1 June 2022, we had opening balances. The cash book had a balance of 20,500. So this is on 1 June. So I'd left some space for us to be able to record. So this is our opening balance. And how much is it? 20,500, like that. And then we are told that the capital account is 70,500. So we go to our business ledgers. So this way, we started with our debtors, which we recorded and finished. So our debtors, we've recorded most of the transactions and finished. And then we go to the general ledger. That's where we find the capital account. So we are told that on 1 June 2022, the capital account had an opening balance of how much? 70,500, like that. And then the furniture account at 15,000. So we come, this is our furniture account. So our furniture account is an asset. It's an asset. So assets, they always have debit balances. They always have debit balances. So opening balance for the furniture account is 15,000. And the office equipment account, which is this one, had an opening balance of 25,000. Like that. The motor vehicle account had an opening balance of 95,000. So motor vehicle had an opening balance of 95,000, like that. Okay, and then we also have MFC bank loan account, 85,000. So this is MFC 1 June 2022 with an opening balance. Oh, sorry. Let's do this. So our bank account should always have a credit. So it's our creditor. We owe them money. So its opening balance would be on the credit side. So it's opening balance, which is 85,000. Okay, so these are the opening balances that we are given. So with our ledgers, we are supposed to see them having the debit side and the credit side. It is only the cash books where we pay, that's where we see the receipt and payments. So here it's always our credit and debit. So you can always correct if you see that we have copied. Sometimes it's issues of copying. So when we are copying these things, we copy wrongly with certain descriptions that are not supposed to be there. So it should always be debit and credit, debit and credit. So the idea is for you to be guided to say, when you want to credit something, you know, this is the credit side, this is the debit side. So it's the same everywhere with our ledgers. It's only our cash books that we show, because those ones we have to receive and pay, to guide you to say this is the receipt side, this is the, but the concept is the same. It's a credit and a debit, like that. So you can always correct your ledgers like that. Okay, so transaction on 1 June, we've recorded all these opening balances. So that's how we record the opening balances. And then we are told that the following debit orders were paid. For rent, it was 5,700 inclusive of VAT. So if ever we pay by debit, then you find usually, most probably, our landlord would have taken the money. So if we are not given an invoice, then there's no need for us to double account. Okay, so we come back to our business account. So it means on 1 June, there was a payment for rent. How much was it? 5,700. So this was the payment for rent, 5,700. So we are paying, which means we have to also go to our business ledgers, to our rent account. It's an expense. We are supposed to increase our expenses. Here we are. So it's our business account. But we are told that it's inclusive of VAT. So on our expense, it's inclusive of VAT. So we have to record exclusive of VAT. So it's going to be 100 divided by 115, like that. 100 divided by 115. So this would be the rent amount. So then it also means we have to go to the VAT account so that we balance off. We go to the VAT account. This is on 1 June 2022. So this is our rent. And it's 5,700 inclusive of VAT. So the VAT is 15 by 115, like that. This is the formula. So you should always check if it's inclusive, then the formula becomes 15 divided by 115. If it's exclusive, it's 15 divided by 100. Because in the, like 100 does not have VAT, but if it's having VAT, it's 115. Okay, like that. So we have recorded, this is what we are going to claim from SARS in terms of VAT. So we are going to pay less. Whatever that we received from our clients, and we are now claiming what we paid over to suppliers. Okay, and then we've got insurance, car insurance inclusive of VAT, 855. So it's a debit, it's coming from our account, and it's 1 June 2022. 1 June 2022. So we've got insurance, how much? 855. So that's how much we paid. And when it comes to our ledgers, we also go back to our ledgers. We can start with the insurance ledger. 1 June 2022. And it's coming from our business bank. So we are increasing our expenses for that year. And how much is it? It's 855 multiplied by 100 divided by 115. So we are allowed to claim VAT from insurance. We are allowed to claim VAT from insurance. So we also go back to our VAT account. And then from the insurance, we claim the VAT. And this is how we claim it. So you can see whatever that we are supposed to pay SARS, it's coming down because we are claiming what we have paid over to the insurance company. And also we are told there is 513 from Cell C for the internet inclusive of VAT. So this is also inclusive of VAT. So it's in our account. We are paying Cell C. So internet, Cell C, how much are we paying? 513. And then we can go to our ledger. We can use an internet ledger. We can use a telephone and internet ledger. Usually we use a telephone and internet. So now that there are no faxes, they've now converted it into telephone and internet. And how much is that? 1 June 2022 from our business bank. And then it's 513 multiplied by 100 divided by 115 because it's inclusive of VAT. And then we go to our VAT account. So you should always, we are VAT registered. So anything that is allowed for VAT to be claimed, we claim it. We claim the VAT. 15 divided by 115. So usually you find when the banks are debiting us, they are already debiting inclusive of VAT. So we just need to apply the same formula so that we claim the VAT back. And then we are told then there's a 5,000 debit by MFC Bank. So we go to our business cash book, 1 June 2022. So it's a MFC Bank loan. And how much? 5,000. That. And then we go to our business ledgers. Remember, we had an opening balance for MFC, which is here. So we come on 1 June, we pay them. How much are we paying? 5,000. So already I had put in formulas so that it can determine the closing balance. So which means we had an opening balance of 85,000, and then we have paid 5,000, and then now we are left with 80. So that's what the closing balance means. Okay. Yeah, so we've recorded our business transactions, and then we are told that on 30 June, we paid the messenger and the secretaries, and the secretary their salaries. The messenger's salary is 3,000 and the secretary is 5,000. We deduct 1% UIF and also contribute 1% UIF. Okay. So, and we do our workings. So we are told that the messenger salary is 3,000. So this is 3rd June 2022. So it's an expense. It's an expense. So as an expense, our total cost to company is what we record in our expense account. For messenger, to the salary, the salaries and wages account, and then this one is for our messenger. How much is it? 3,000. So we record it in full. Record it in full. And of that 3,000, but we are not going to pay the messenger the 3,000 because there is a UIF element. So there's a UIF expense, UIF liability. So we've got a liability to take 1%. We are supposed to take 1% from the messenger and pay it over to the UIF. So we are supposed to take 30 rands. And then we pay our messenger. Pay our messenger. So on our bank side, how much do we pay? We pay the salary minus the UIF. So this is how we record the transactions. This is how we record. And also we are told that we also have an employer's contribution. We also have an employer's contribution, UIF expense for the messenger. How much are we contributing? 1%.
Sorry, ma'am. Can I just
Yes.
ask something that you're talking about the UIF and employers' contribution?
Yes.
So small firms like us, we've been approached at some point by labor department,
Yes.
where like in a big building, and let's say it's 6 floors. So most of us would find it's one office, a reception, one office, and it's a reception. So they once came for that assessment, and we all held a meeting to say, look, small firms like mostly, I would say 75% of most of us are dealing with RAF, which pays more than they pay you once in 6 months. And that being the requirement in terms of the labor law and us having to pay a contribution. It's as and when you get paid that you usually give maybe your messenger, like mostly we use those that does courier. You'd find maybe say in one, we contribute to what, let's say, to save documents and all that stuff. So no, this is it's something that came as a shock to us to say now
you're supposed to pay. Yeah. Yeah. So
requirement and that. How do you go about that? If you have an idea.
Yeah, so every employer, whether domestic or commercial, like, so even if you're a small firm, the moment you employ someone, then it has got it has got an obligation. So this is by the works of the law to say it has got an obligation to deduct from that particular person. It pay as you earn and UIF. So you look at that person, like in your cases, if your messenger is an outside, like he's not employed by you, then you are not supposed to deduct. Where you probably utilize a person who gives you an invoice, then that person is running his or her own business, where then you will say, I've done 10 meters for you, pay me at this fixed rate. And then they go to another attorney or another firm or another legal practice. And then they also carry out, they collect and deliver for quite a number of various clients. So those ones, you are not like giving them an employment contract. So you do not have an obligation to pay for them. But for your secretaries, if you have a secretary who is permanent, employed at your offices, as long as they are working for more than 24 hours, you are supposed to deduct. You're supposed, so even if you are receiving your money from the Road Extent Fund after 6 months, I guess your secretary, you pay them on a monthly basis. So if you are paying them on a monthly basis, you have agreed on a salary, say, of 5,000, then you can't pay them the full 5,000 because they've got an obligation to pay 1% of that 5,000 to the UIF, you see. So even if you're a small practice, then you have to comply with the labor law. You have to comply with the law that is there to say for your employees, you have to deduct. Probably the one, say for instance, if yours is it's an incorporated company, then for your salary as a director, because when you are a sole prop, just like advocates, you find with advocates, they draw whatever that they have earned according to their earning capacity. They draw into their personal accounts and then use it. So on drawings, there's no need for you to pay tax. There's no need for you to pay UIF immediately because it's a drawing. The way that you account for tax as a sole prop, you account on profit. So at the end of each financial year, you compile your financial statements, you determine your profit, and you pay over to SARS. So I think it's provisional tax every 6 months. But if it's an incorporated company, then a director should have a salary. But that salary is not enforced. You're not enforced to get a salary where there's no money. So when you get your money from the Road Extent Fund, say as and when you get it, and you earn, so you also have to pay as you earn to SARS. So the moment you are earning, you then withhold the tax and pay over. So say 2 months you haven't earned anything, then you skip it. And then the month that you earn, then you pay over. The only challenge is that you would find if you have gone 6 months without earning, when you earn, your salary might be very high. And with a high salary, when you calculate tax in that month, the tax is too high. Unlike when you earn and then you spread, you do your budgets, you know, in a year, I'm going to earn fees of 1,000 to say 1.2 million. And of that 1.2 million, my salary, I wanted to remain 15,000 a month, 20,000 a month. So whenever you are paying your bills, you're doing everything, you make sure that you keep a reserve for paying salaries so that your salary can remain the same and the tax that you are paying remains reasonable. Unlike where you are getting a salary of 200,000. When you compute the tax from there for that particular month, it will be so hectic. To be so hectic for you to pay it over. But this is law. You guys deal with law. So one just have to to comply with the law, you have to have a payroll system or do your pay slip somewhere, and then you have to do your declarations to UIF as well as to SARS where necessary. So I hope I have answered you. Okay, so we'll proceed. I haven't heard from you, so we'll proceed with our example. So I wanted to show you the employer's contribution, which is this part. So the employer's contribution becomes an expense to the employer. It's an expense to the employer because they have to put in some money also, just as the requirement. This is law requirement. And so we debit an expense account. Our description would be, it is because of the messenger. And then we credit the UIF liability account. So this UIF liability account, if you have a look at it, then it will have, at the end of the day, 1% from the employer, 1% from the employee. And then with that total, this is what you pay over by the 7th of the following month, of every month that we run. Okay, so this is for the messenger. And then we can illustrate as well the salaries and wages for the secretary.
So
Yes. Hello.
Yeah, it was because of the load shedding, so I had to go to the car to go and charge.
Oh, okay, all right.
Yes, so that's why it took long to come back.
You couldn't hear my explanation
At all. Once I asked the question, it just went off. So I just had to go to the car to charge on the charger, and then that's why
okay.
I'm reconnecting now, because we had just load shedding, so my battery was low.
Your battery was low. Oh, okay.
Yeah.
So what I was saying is that okay, so for your messenger, I was saying that for your messenger, if it's not a messenger that you have given a work employment contract, there's no need for you to pay UIF for that, because he's the one who's supposed to bill you for the number of times that he has come in, collected your mail, or delivered for you. Then there's no need for you to contribute UIF because it's not your employee. But now your secretary isn't, even if you get paid by the Road Extent Fund, even after 5 months, it doesn't mean that your secretary will pay him after 5 months. You're obliged, even you from your own heart, month end is coming, I have to put in money either from yourself or you have saved, and then you've got that salary that you are supposed to pay on a monthly basis for the secretary or for the candidate attorneys. So then your obligation on that salary is that you cannot pay, like when you do your contracts, you tell them me, I'm the employer, I'm representing the employer, which is our firm. We've got an obligation to deduct taxes and UIF that we pay over on a monthly basis. So depending on your salary, then you can illustrate and say, okay, you are supposed to earn 5,000, like in this case, but we've got an obligation to labor to pay 1% of that 5% on a monthly basis. So what you pay the secretary, you pay him less than 1%, you see? And then, so because this one, even if you say, you can't employ someone and say to someone, I'll pay you as and when RAF pays me. If they pay you after 2 years, what will happen? Your secretary won't be surviving. So when you run, whether from your personal funds or from your budgets, your savings that you have, you work out your budgets and say, now I have received my fees, I'm going to set aside 200,000, which will help me for 6 months to run my practice. And then the probably 600 that I've received. I can pay doctors, I can pay advocates, I can pay whoever, whilst I collect the reports, and then the next payment is coming. So in that doing, then you fulfill your obligations on a monthly basis. You then make sure that you deduct. So the other thing that I was saying is that if you are an incorporated practice, if it's a law firm incorporated, so with the directors, they have to earn salaries. They have to earn salaries. So, but with directors, you are not forced to take a salary every month. You are not forced to take a salary every month. Each time you take your salary, then it means you have money available to pay yourself. Or if you want to pay consistently, then it means you work on your budgets. You work on a savings account where you would say, I have received money from RAF, my fees are so much, I'm putting aside so much in an investment account, in a call account, where when month end comes, my rent is so much, my salary is fixed at so much, my secretary salary is so much, my expenses are so much. So if your expenses are 30,000, you recall that money, it comes into your business account, and when you get it, you don't just pay yourself your full salary. Then you know the law. You know this UIF, you prepare your pay slip. Okay, I have to contribute 1% up to so much limit. When it comes to pay as you earn, if you earn anything above 7,500, you start deducting tax according to the tax tables. You see, and then you also pay. So SARS becomes part of your what? Your budget. You know, this is the net salary that I have to pay the secretary. This is my net salary. And then this is how much I pay to SARS on a monthly basis. Unless if you get to a month where you say, I want to take a higher salary, then your figures change. So that is more of like an obligation. We can't run away from the law. We can't say we're a small practice, because the moment you employ someone, you just have to pay. Even at home, your domestic workers, your gardeners, if you're employing them, you're supposed to also contribute towards UIF, you see, and pay for them, and so that if ever anything happens to them, they can go and claim for the 6 months or for the duration, I don't know how long, and then they benefit. Okay, so I hope you understood that. Hello. Okay, so for our secretary, this is how we also record. I'm now continuing. I think we are now left with a few minutes, so I need to illustrate this to you. So let's start by recording our salaries and wages for the messenger when we go into our ledger for salaries and wages. So we come, this is 30 June 2022. So our salary for the messenger becomes the full amount, the gross amount, like what I was illustrating there. It's going to be the gross amount. And for our secretary, it's also the gross amount. That's what we record under our salaries and wages account. So that's our total expense, which is 3,000 and 5,000. And then on our UIF expense, we record the 1% that we said is the employer's contribution. So for messenger, the employer's contribution, which is 3,000 times 1%, 1,000 times 1%. You have to put an equal sign for it to pick. And then for the secretary, it's also 5,000 times the 1%. So this is the employer's liability. So this is the employer's what expense of employing people. So now that we have recognized the side, then we also have to go to our bank account. Now we are paying them their salaries. Oh, sorry, which is the business cash book. Now we are paying them their salaries. This is 30 June 2022. We are paying the messenger. And how much do we pay? If we come back to our workings, we are paying 2970. 2970. So this is after we've deducted the obligation that the messenger has got, so that in the future they can get something from the government. And then for our secretary, it's 4950, which is according to our workings, this one. We have deducted that. Okay, so we have recorded, this is how much we are paying them. This is how much we are paying. We are not going to pay the full amounts, because the moment we pay the full amounts, then the firm will be made to pay again UIF, because it has got an obligation to deduct. Okay, and then we go to our UIF liability account. Let's look for it, this one, the UIF liability account. So on 30 June, we've got a liability to pay 1% for the messenger, the employee contribution. Which is 1%, which is in this case 30 rands. And then we've got also an obligation to pay for the messenger, the employer, 1% for the employer, which is, I think I am leaving like that, also 30 rands. And then for the secretary, we also have 1% for the employee, which is 50 rand. And then we've got the employer, 1%, which is also 50 rand, like that. So this is how we record our transactions. So basically this one, we've recorded these two, we have recorded them in our salaries and wages account. So this is our expense account. Our expense account will have this one and that one. And then our other expense account is our UIF expense account, which should have these two expenses. And then our bank, it's the net salaries. The net salaries are the ones that go to the bank. To our liability account, 1% for the employer, 1% for the employee, 1% for the employer, 1% for the employee, yeah, which is 50 rands, like that. Okay, so this is how we record our salaries. And then we are told that the attorney do an amount of 10,000. So in this case, most probably our attorney, it's a sole prop, so you can draw money from the account. So roughly how we are supposed to capture it, I'm just gonna do a working in illustration. So we take to our drawings account, how much, 10,000, and then so our drawings account is more of like an equity account. It will at the end of the year be consolidated with retained earnings or with any capital. It will reduce the capital or any profits that are coming from the business. And then we are going to credit our business bank. We are paying, so we pay 10,000. So this is how we record it. So we go to our business bank. So it's drawings, honest drawings. How much is it? 10,000. So we are paying out of the cash book, the honest drawings. And then we come to the business ledgers. You would find as part of our business ledgers, we should have a drawings account, which is will go on the debit side because it's reducing the equity of the business. 30 June 2022. So our business bank is the owner who is drawing how much? 10,000. So that's how we record it like that. Okay, and then UIF is payable on the 7th of the following month. So if it was the 7th of the following month, we'll get into our business cash book, we pay it over on the payment side. We go to our liability account. If we've paid, we are reducing our liability, then we debit our liability account. And then we are told that bank charges 298,000 inclusive of VAT. So our bank charges, the bank is charging our firm. It's taking money from our account. So it's a payment out of our account. So we come and then we say bank charges. How much is that? 298. That. And we go to our ledgers. So it has got an element of VAT. So where we are told that there's VAT, then we go to our expense. So our bank charge, we record it, which is 298. So it's inclusive of VAT. We are now taking out the VAT component. So we'll capture 100% divided by 115, which becomes 259.13. And then when we go to our VAT account, we take in the component of the VAT, which is 30 June 2022. So it's our bank charges. And it's 298 multiplied by 15 divided by 115, like that. So that's how we determine. So we have recorded our business transactions. We have recorded our trust transactions. We have also incorporated our conveyancing and collection matter into our question. So we are done. We are done. So the only thing that you need to do is just to correct those debits and credits on these accounts, debits and credits. I'll correct that for you. And if you have any questions before we can call it a day, you can ask, and then I'm going to immediately post the solution and the question. I'm going to put it as an announcement, and then it will come to your emails, so that if ever you have any questions, any issues, you can refer back. I think we have been thorough and we have tried to answer everything. Okay. Okay, our trust ledgers as well should have debits and credits. Okay, I think the only other thing that I didn't do was to come up with a trial balance. So if you will need that illustration of a trial balance, then you will let me know. A trial balance, it's basically, let's do it. A trial balance. So with the trial balance, it's a matter of taking our closing balances and then we see if everything has been captured and everything is balancing. So we can start with our trust account records. So with our trust, so with the trust account, usually they call it a trust position. So we start with the trust bank account. So it's a matter of just saying how much is in our trust bank account. And we should have a debit and a credit side. Okay. So when we look at our trust cash book, we are supposed to balance it off. So to balance it off, like in this case, we compare the two sides, make sure everything is adding up. So the side which has got a lower value, is the one that carries over the balance. So our closing balance will come to the side with the lower balance, so that they become the same. So this is where our closing balance is coming. So if we are doing our trial balance, then we would find our trust account should always be on the debits. So our closing balance, we're just closing it off. It means we are closing it here. When we start, our opening balance is going to come to the debit side. So it has got a debit side higher than the credit side. This is how we record it. And then remember, our trust cash book is supported by our creditors. So we go to the ledgers of our creditors. Okay, so like with this one, we've got Mr. Jaden's ledger. Mr. Jaden's ledger, we had 100, we paid 25. So our closing balance will be on the side which is lower. Which is 100 minus 25,000, which gives us 75. Then if you can have a look, they are balancing. So our opening balance would be on the credit side. When we continue, we are continuing on the credit side until the money is finished. So when we do our trial balance, so we'll say Mr. Trust creditor, trust creditors. So we've got Mr. Jaden. How much are we having on the credit? 75,000. Like that. And then who else are we having? We come, Miss Magda. You can see we only paid 7,500. So it's gonna be 108 minus 7.5, and then we get a balance of 100,500. So Miss Magda, how much? 100,500, like that. If you can have a look at it, it's not balancing. So we should have another trust creditor, which this one balanced off. You can see this 1515. So our other one is the LPFF. Okay. So 30 June 2022. Closing balance that will pay on the first. It's 405 minus 98. So it's 307. So when we come to our trial balance, we've got the LPFF. How much is it? 307. Okay, so if you can add up to see, are we balancing? Okay, so if you can have a look, we have recorded properly our trust cash book. Our ledgers are balancing. They are balancing. We don't have any difference. You can even do arithmetics. So our trust account, the trial balance is balancing off. So this is how we do our trial balances. And then for the business account, it's done separate from the trust. We do not mix things. We do them separately. See? Like that. And then we start with our business bank account. So this is our business cash book. We go to our business cash book. Okay, so already it had calculated for us the closing balance, which is basically this less that. So it's that 32. So we bring in the 32. And then we go to our business ledgers. Business ledgers. And then we look at each and every ledger. Okay, so for Mr. Jaden, if you can have a look at this one, it's closed. It's balancing. There's nothing to carry over. For Miss Vilakazi, if you can have a look at it, there's nothing to carry over. For Met attorneys, closed, transferred, nothing to carry over. And then for our capital account, we will always carry the balance that we have on the credit side. So we've got our capital account. Like that. And then we've got our drawings. So if ever there's any transaction during the year, they should accumulate, they should, you know, those transactions should be added up or subtracted so that you come up with your balances like that. And then your furniture account. So it's a matter of going to each and every account. So if we had bought more furniture, so you'd find you also carry your furniture. So you are supposed to balance off. Like in this case, every month and we balance off. We show the closing balance. Were there any movements? No. Then the same amount become your closing balance. If there was any movement where we bought furniture, our closing balance would become higher. So you need to just go on and balance each and every account. So the closing account, it means the closing balance, it means it's a balance that we are carrying over to our trial balance. We are carrying it over to our trial balance. And then we pick it up to form so that we check if we've recorded everything. The idea of a trial balance is to check that everything has been properly recorded and it's complete. So it assists us with checking what completeness. So all our assets, if you can look at our assets, they carry a debit balance. So it's your credit, your debit. Our assets, they carry a debit balance because they are our assets. They belong to the firm. And then our creditor, like MFC, it carries a credit balance because it's our creditor. Okay. Like that, and then we have balanced it off, remember, and we said it's 80. And then our VAT liability, it's a liability account. It always carries, it depends with VAT. So if we have got more expenditure than our fees, then it would have a debit balance. If we've got more fees than our expenditure, then we've got a credit balance. So in this case, you can see it's balancing, our credit is higher compared. So then which means that it's a credit balance. Credits are higher credit balance. Okay, and then UIF liability. So every month, I've done 1 month. So every month you'll be what? Comparing. Remember, these accounts reduced by payments. So if you've paid your liability, it will come to 0 or it will come to less the amount that you have paid. But in this case, because we haven't paid, then we pick up the amount that we are owing. And then our fee account, we need to balance it off. So you can see this side is higher than that side. So with the fee accounts, with the expenses account, every month you have your opening balance. For the 12 months, for your financial year, you always carry from the previous month your closing balance. You take it over to as your opening balance. Your closing balance as your opening balance. You go like that until the year is finished. Then we close off by transferring to the income statement. We prepare our financials, we pay our taxes for that year. The fee account goes to 0 and we start on a new financial year. our fee account we record on a yearly basis. Add it up, gives us a yearly balance. That's what we take to our financial statements. Then we close off. Next year, we start from 0. And the same with the expenses. Every year, we start from 0. Every year, we start from 0. Okay. Closing balance. So it's going to be, I'm just going to apply a formula. So we are adding up our credit side. And then we subtract our debit side. Like that. So we get our closing balance. So if you can look at it, this and that should be the same. So you can always say this minus the balance which is here. That's what you put so that you equal. Okay. So our fee account, when we take it to the trial balance. So our fee account is always having a credit balance. Fees on the credit, expenses on the debit. Our rent account. So you need to also balance it off, just like the balances that we did like that, the rent. So remember, I told you it should become cumulative from the opening balances. Always become cumulative, always become cumulative until the year is finished. And then we have your year trial balance. And then with your year trial balance is the one that you utilize to prepare your financial statements. Okay. And then your telephone account. So it's a matter of picking up everything. We take them over to our trial balance. Our salaries and wages. Take them. And then our UIF. So the trial balance that we are doing now, it's more of like for 1 month. For 1 month, but you are supposed to make it cumulative like that. And then our bank charges, take them in. And then we pick up the balance, which is that one. Okay, so this is what makes up our business account. We've got the balance sheet, we've got the expenses, and then we add them up. And then we want to see if we are balancing. If we are not balancing, then it means we have done something wrong. Like that. Okay, like in this case, we are not balancing. So which means something went wrong somewhere. Okay. Why are we not balancing like that? So our difference, it's because of what bank charges. So if you can go back to our cash book, we just are supposed to check. You can see our formula is going up to 14. So if you can press F2, F2, Control F2, Control F2, Control F2. Okay, I'm good. Okay, we just want to see our formula. Okay, let me sum like that. So it wasn't adding up the bank charge like that. This bank charge was not included. So if we can add up everything, closing balance. No. So our closing balance has got a formula deficit. Debit side minus sum, the credit side, which is up to there. So we had not included our bank charge, which is 32,247. So if we go to our trial balance, you can see now it's balancing. That's because of our business bank account, which made it not to balance. So now we are coming to 0, 0. So this is our trial balance. This is our trial balance. I hope you understand. So we just require you guys to prepare up to this extent, then you are done. Okay, so we are done with our webinar. It's a combination of the 16th and the 23rd. This is our last webinar. I'm going to post this. I'm going to post. So the full answer, you'd find the full answer. It's coming from, we've done it before. So you can go through the full answer, or you can go the way that we were posting, which is separated per schedule. I think which is very beneficial. We've done it, we've demarcated, we've done separate ledgers. So for your submission, whenever you want to submit, say you have answered like this and it's a lot of pages, then what you do is that you come, you click on view, you do your page break preview. So when you do your page break preview, it will show you that your page is going to cut. So you come, you go on the line where it is going to cut, you drag it to the end. So like that, you've dragged it to the end. And then if you can have a look at it, it's showing you that it is going to do how many pages? 5 pages, which we don't need. So you can drag the blue line up to the point that you want. You drag the blue line. So our trust cash book goes up to there. You see, our trust cash books and everything goes up to there. And then you come, you do the same page break preview. You see, like that, you adjust. And then you make sure as well that your figures are visible. So how do you make sure? You just double click on top and then they become visible just like that. So you've set it up. You go to your cash book page break preview, and then you come where you can't see their hashtags. You double click to open up. You set up like that. And then you come to your ledgers page break preview like that. So it will cut. You can always adjust so that one account is shown in full. And then you also make sure you double click on top here when that T item comes out. You double click so that your figures become easy to view. So you can as well drag the blue line so that it can cut where you want it to cut off. It can cut off where you want it to cut off, like that. So that all your transactions will be fully included. It can cut off where you want it to cut off, just like that. The transactions are fully included so that when I'm marking, then I don't mark you wrong, I don't assume. So all your pages that you want included, you just make sure you do your print preview like that. So this is how we do it. So it's coming out. So now you want to convert this for me into PDF. So you will come and click and then control, click, control, click, control, click. You don't release the control. You continue clicking. So you are pressing on the control key on your keyboard, and then you are clicking on the spreadsheets that you want to present to me or to your facilitator. Then you come, file, you save as, then you browse, and then you change it. You see, now you can change it to PDF. You see, then you name it your webinar to answer 2023, like that. So it's our webinar answer. So you change to you come and save as PDF, and then you also come, you click open file after publishing. So it will come to your folder. You need to have a folder where you save things, where you can trace your documents. So you need, like me, you can see I am saving in the 2022, but I'm supposed to create it as what? 2023, but okay. Like that, I publish. So when I publish like that, you can see it's now converted into PDF. Everything is coming out. Gives me the number of pages, everything. The business cash book is there, followed by the business ledgers. You see, everything is popping up. If we go up to the bottom, we see our trial balance. You see there. And it's balancing like that. You see, this is how we do it. Okay, so I'm going to close it. So this is what you would submit. So in my case, I'm going to save. So to avoid you writing on top of these ones, you come, you right click, you ungroup. So ungrouping, it means you are not going to write. When you type on one page, it's not going to repeat on the other pages. So we are done with our assignment. I'm going to close, and I am going to also save, and I'm going to share it on the platform for you guys and make sure that you access it. Okay. Any questions, come to the forum. Come to the forum and let me know if you have any questions, but I wish you all the best. And I know you can actually just go through this and find it easy to go. So I'm going to get into our eLeader, log in and load for you guys before I can go. So I have finished it exactly almost half-past. Okay, announcement. So I can see there's a live webinar link for accounts management session 2. It's there. It was put in, so you can watch it. You can watch it, and I'm going to add in webinar 2 and 3 answer sheet. The question and as well as answer sheet. Okay, so I'm going to add in the attachments. Okay, so we are not going to have any other webinar. Our next topic, our next assignment, it's just an overall kind of like we cover everything, but in a simplified manner, so that you won't have to struggle much. I know this one is quite taxing, but I know you guys can do it. You can actually do it. Webinar 2 answer. It, and then we upload and make sure everything is there. And then also the question, webinar question. I'm going to webinar 2 question. Okay. All right, so I'm going to all participants, I'm going to post. I've posted it and I've posted it to you. So wish you all the best. I see most people have left. And I am left with one participant, and she was not answering. So I hope this was beneficial for you, and you will be able to apply yourselves. Wish you all the best. We can stop our recording now.